Hey, what's up guys? Welcome back to our channel. In today's video, I'm going to be talking about one of the most innovative artificial intelligence stocks out there that has become extremely undervalued over the past year or so, resulting in it being down roughly 65% from its highs of February. To put this into perspective, the stock was trading at around $180 a share at the start of the year, and now in the middle of November, it is trading at only around $40 a share, which means that the reward potential on this stock is monumental. I'm of course talking about C3AI, or ticker symbol AI, which is a first of its kind artificial intelligence company that sells AI software as a subscription to other businesses that are looking to take advantage of AI's game-changing benefits. In this video, I'm going to share exactly why C3AI stock has a solid shot at potentially quadrupling its valuation over the long term, at what prices I'm personally buying its shares at, and how artificial intelligence can truly become a disruptive technology. But before we get into it guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. Now for those hearing about the stock for the first time, C3AI basically went public just about a year ago at a share price of around $100 and is led by the multi-billionaire entrepreneur Thomas Siebel. Siebel founded C3AI in 2009 after he sold his previous company called Siebel Systems to Oracle with over 5,000 employees and while generating around $1.3 billion in revenue. So him now being the CEO and the founder of C3AI, which in comparison only does around $200 million in revenue right now, is incredibly bullish since Siebel brings decades of experience starting up and rapidly growing software companies. But the quality of the CEO is only scratching the surface of the massive competitive advantages that C3AI has to lead the AI revolution. You see, artificial intelligence is an emerging technology that has immense potential to save money for almost every business on this planet that either creates, uses, or applies data. But because of just how big the AI value chain really is and all the different tools that are available out there, many companies really can't spend millions of dollars every quarter to develop their own AI software in-house. For example, oil companies like Shell or ExxonMobil would probably struggle to attract bright, young software developers to build their own AI platform. Or companies like Walmart would need to invest in all new departments and hire a whole new workforce if they wanted to use AI for their own self-driving trucks. And this problem is exactly what C3AI solves by offering artificial intelligence as a subscription service to any business who wants it. C3AI can customize its software for literally any application from healthcare to manufacturing to telecommunications, which means that all of their customers can essentially harness the full benefits of AI without having to do any programming themselves. And the best part is that no other company on this planet right now sells AI as a service, which means that as more and more people realize the true benefits of artificial intelligence, C3AI can exponentially grow their revenue, similar to how Tesla did when they were the only ones selling purpose-built electric cars. As a matter of fact, Cathie herself just recently said that in the next 10 years, AI would deliver a market opportunity of over $80 trillion in the enterprise software space, which is exactly the industry that C3AI competes in. And since over 90% of C3's 100 or so customers are enterprises, I expect C3AI to become the single-handed leader of this insane growth that Cathie is predicting. On top of this, tech giants like Google and Microsoft have already signed multi-year deals with C3AI to build customized solutions for their own customers. And major oil companies like Baker Hughes are also putting a lot of backing to C3AI by recently signing a 5-year extended agreement, which really goes to show the immense value that this company's business model is providing to the industry. Despite all of this, however, we're seeing the stock price for C3AI really flounder in 2021, which has definitely left a lot of investors scratching their heads as to whether or not this stock is still a good buying opportunity. But I'm here to tell you that if you want exposure to a once-in-a-decade investment opportunity, then C3AI stock is certainly worth considering. You see, typically when a stock price has been going down for such a long period of time, it's often because of either a failing business model, insider selling, or just the business not growing its revenue. But neither of these are the case with C3AI. As you can see, their top line revenue has grown by 29% for the second quarter, while their customer count grew by an insane 85%. And since C3AI's actual revenue tends to lag customer acquisition due to the multiple months it could take to custom make the software, C3AI could be on track for reporting some very high earnings over the next few quarters. And as we all know, in the growth stock investing world, the best time to invest invest in your favorite stocks is when the business is improving, but the stock price is actually going down. And that is exactly what is happening here with C3 AI. Over the past 9 months or so, we've essentially had a bunch of different factors like inflation, growth stock investing fears, the tapering, and obviously the COVID reopening that has really put this stock in the hole. But now we're seeing a very, very big inflection point in the market where we're seeing all these high growth tech stocks move back up, which tells me that now could be the perfect time to invest in C3 AI. And since C3 has over $1 billion in cash and trades at a market capitalization of only around $4.5 billion, I think this stock can get back above its $100 IPO price very, very soon. If you have a closer look at the stock chart for C3 AI, you can see just how incredibly oversold this stock has been over the past 9 months, ever since we started seeing the growth stock rotation start back in February. As you can see, after the IPO hype kind of settled out, we saw a huge sell-off to around this $50 level, and now we've kind of found a very strong support region right around this $40 to $50 range. And typically when you see this kind of sideways consolidation in the stock price, it tells me that there could be banks and institutional investors that are actually loading up this stock at these cheap prices. And as you can see, the volume has picked up significantly over the past couple of months, which tells me that people are actually interested in investing in C3 AI, even though the stock price has been doing very, very bad this year. And to be completely honest, this is very normal because most IPOs underperform a year after they go public, and this is the same case here with C3 AI. The only difference was that this valuation got extremely overextended back in November and December of last year. And this poor stock has kind of been caught in the middle of the whole software rotation, which is why C3 AI could be a big beneficiary once we start seeing a rotation back into these small cap growth stocks. If you have a look at Microsoft stock, you can see the stock has been going up consistently over the past year or so. And this big move to the upside really started at the end of last year, which is right around when C3 AI ended up peaking. This basically goes to show that investors have been putting a lot of money into large cap companies instead of smaller cap companies like C3 AI. And as is the case with the market, we will at some point see a rotation back into the small caps and out of these large caps. I'm very confident that in the long term, this stock can be worth at least $20 billion, which means that the shares could be worth over $200 a share in the next 5 years or so. I'm basing this bullish thesis off of just how quickly AI has been growing their software revenue and just how much industry demand there is out there for artificial intelligence products in general. And we all know for a fact that many businesses are really putting a lot of investments into digitally transforming their operations, and C3 AI could be leading the pack for this rapid adoption of artificial intelligence. And especially since the stock has a 13% short interest and is expected to report earnings on December 1st, makes me quite optimistic that right now could be one of the best buying opportunities in the stock. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know what you guys think of C3 AI stock down in the comment section below, and let me know any other artificial intelligence stocks that I did not cover on my channel yet that you guys might be interested in. But anyways guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.